today's segment, my friend. Beginner's Guide to Small Options. Small options are here. We've got them for the small precious metals markets. You can go into your platform if your platform does supply the small exchange futures, and you can find your first small exchange futures options on SPRE. And so this is a pretty exciting time here. The whole point of small exchange is to make all markets, and we're starting here with metals because that's been a nice place that we could test out our options here. A lot of people trading metals, market that's been around forever. We have market makers in there that can keep that market decently liquid. We're always looking to enhance liquidity, but that market's been pretty straightforward for our market makers and everybody else. And so it's the first one that we're looking to add here, Jermal. We're going to try to add this on all of our products to further that mission that we launched with from the small exchange a couple of years ago, which is just more access on all markets for all people, any account size. You can get in there right now today, and you can trade around metals exposure, Jermal. And this is what the beauty of small options will be. I mean, even in the derivative space, the options on future space, you'd be hard pressed to find options that you could buy or sell that cost you just a couple of bucks to get that exposure in the metal space, even with micros and some of those other futures markets still too big. So we're really excited about it. Hopefully you're excited about the small options too, my friend. You've been a part of this growing process from the small exchange as well.
No doubt, man. I mean, this is cool stuff, man, to finally have some options on. I know the people have been asking for it. Got to give the people what they want. So it's great. It gives you more opportunities to trade different ways, to hedge, put up different kind of strategies. It's good stuff.
Absolutely. I mean, I always whittled down options to just like, it gives the everyday person, the active, whoever, it gives just people, Jermal, one different ways to get paid, like different strategic. Oh, I can get paid from the market not moving. I can get paid from the market moving lower, but not that much lower. I can get paid from the market moving really high, but it has to move, really high. It can't just move. So different ways to get paid, but also just further smallifying all of these markets, because options by definition, they let their buyers buy or sell a market at a specific price by a specific date. But at the end of the day, whether you're buying calls or selling puts or vice versa, you're just dropping down the size of buying or selling that underlying market, Jermal, and you're giving yourself some different odds. A lot of people that we talk to love selling options just because you get better odds on getting long or getting short or whatever, as opposed to buying or selling the underlying market. So great, important stuff when it comes to just options in general. And in the stock space, it's very straightforward. Like you can jump from Apple to Amazon to an ETF like SPY, and it's going to be 100 shares American and settled to shares, right?
Correct. Yes, it's going to be 100% American and settled to shares, which is always the one thing that people sort of grapple over. Oh, how come it can't always be, European? It's not a fact. What's the deal with SPRE? It's European or American? American
options on. Yeah. And that's honestly, I feel the same thing. And we did not even just this morning, I fielded an email where someone was like, man, like, why isn't it European? I'd prefer it to be European. It is a pain on the back end trying to get these options through, to get them through in a European styled option. So we went with American, but it's similar to stocks. I know it's a little bit of a pain for people, but there's very particular instances where you get exercise. So it's not the end of the world. I think what people maybe find qualms with more so is if they do get exercised early, or you accidentally hold to expiration or something happens, being physically settled to the shares is kind of a pain, because, if you do sell that put or that call, and then that translates to shares, your buying power jumps up huge. And so hopefully your account can withstand that. And then two, you likely don't want that physical settlement, right?
Yeah. I mean, as they always say, option traders are option traders and not stock traders or even future traders sometimes. But, I feel like for most of our customers, they should understand how some of this works. If they don't, I mean, if you're trading a defined risk spread, then at least you have the ability to, if you get assigned on something, you can do a covered stock trade and get out of it. And, you're sure your buying power will go up on the day, but you can get it back in line. If you're trading strangles, then this message is not for you. You already know what you're doing. So, there that is.
Absolutely right. And the nice thing about the first options on small futures is that they're one contract, and all of our futures contracts are $100 times the price. And so let's face it, it's 100 shares. Like it's the same exact thing. One contract in the small futures options is just like your options on stock that are 100 shares. It's the same $100 multiplier there when you're selling puts or whatever you're doing. American, similar there. What is nice, though, is that with the small futures, Jermal, you actually don't have to worry about if you're exercised and that translates to shares of an ETF or anything like that, or you hold stuff through expiration in your strangle trade or what have you, and you're in the money by $1 or whatever. It's all cash settled. So it's just cleaned up in your account. The money that you made or lost on the trade is in there, and then you just get your buying power back. The cash settlement has been really nice on the futures side and the options side. But enough about the specs. Let's go through just a couple of quick example trades for all of you out there who are looking to get started in the spree futures options. To me, it's always, Jermal, these things are so small in here. All of the options on that page range from $10, $20 or 10 or 20 ticks to $1 or a couple of dollars there, which is $100 or $200 or $300 in there. And so my thing is always, try something like a short put or a short call or a long call or any of this stuff, and just watch it tick for a little bit. And just see the way that it trades. You can close this stuff. There's no day trading. You can close this stuff in the next minute or so and just get comfortable in the space, right? I mean, short puts get you long the spree market with a higher chance of winning, but lower upside. Long calls let you get long as well, but you have a lower chance of winning, higher potential upside. And then, like you alluded to, the strangle in here, you're short both the puts and the calls. You get paid from being neutral spree, a little bit of a precursor here on what you can do in these markets. I would pick something here small and just watch it tick, right? Like that's probably the best way to start out, right?
Yeah, I mean, for sure. That's probably the easiest way. Or you could, and this is a good question. I honestly am not 100% sure. If you buy one long spree and you sell one upside call, is that hedged or no? One long spree is one spree. That's not 100. That's not 100 futures, right?
No, yeah, you're hedged.
Okay, that's what I thought.
Yeah.
Just want to make sure. Just wanted to clarify that. So you could do that too. You could do like a covered call trade.